What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today on the Saturday edition. Today, we're going to be talking about the future of the S&P 500, looking at the daily and weekly chart really to get a better idea of what's to come next from a technical standpoint. So if you're ready, let's step into the war zone. First and foremost, let me shout out some of you guys here. Let me know where you're tuning in from today. We have D23. What's going on? Good to see you. Bad Indie Trading Wars Army. Sashikant, what's going on? Ramon, what's going on, my brother? Josh, what's going on? The Mad Clown, what's going on? Who else do we have in the building? So what I'm going to do is we're going to talk about how we got to start off with how we got here. Okay. We also need to know where we are going next. Must hold levels. And then we have the news factor, obviously, with the Russian war, all that. We have a factor of that to consider as well. And then what I did, what you can do. Okay, so there we go. Corey, what's going on? Mike, what's going on? Rollbit, what's going on? What's going on, guys? Jamel, good to see you. All right. Okay. So we're going to start off here on the weekly chart. And I'm going to redraw the Fibonacci to talk to you guys about with this. Okay. So the first thing that happened, guys, is we called the top of the stock market. And that's legitimately the truth, because we had this outside bar, and I said we had this outside bar that barely made a new high, right? It barely made a new high. And then from there, we could tell that there were some trap bulls, because if you look at the candle closely, this outside bar, we have bulls that pushed up and then we turned around immediately and sold off. So the signal to go short was right when we broke this outside bar. And this one, we did take advantage of this and made good money. So first of all, the patterns have been reliable this year, right? Even these outside bars, even if you're getting a little bit of push down, you can still make money on these guys, okay? The goal is to lock in partial profits and look for the big winners. So first of all, we were good here with catching the high. Okay. Now, whenever we have a push in one direction, we have something called an impulsive leg. And this is that push that happened. Okay. I'm going to hit the replay so we can just look at how the Fibonacci's work. So we had a push down, then we had the bull step in. Okay. And from there, what we do is anytime we have an impulsive leg, you take the Fibonacci from the high to the low, right? In this case, because it's going down. And what you want to do here is, let's mark this up perfectly. So 479.98. And what you're trying to do here is you're trying to say, okay, what are the goals of the players in the market? What are the goals? Okay. So anytime we have a push down, we will have a retracement at some point. We will. At some point, we're going to pull back. Because you never, ever go straight down forever. Never. Okay. So what we had here is we started to retrace. And the golden areas are always between the 50 and the 618. Always. Okay. And in this case, we actually came and clipped the 650 first. And then we pushed up here and boom, we got the rejection on the 618. So we knew that there is an important bear algorithm there, because we could visually see that right there. There's a bear algorithm. And anytime we have a rejection on the 618, the goal is to make a new low. So the goal is to complete the leg and get back down to one of these extensions, okay? So as long as we clear the low, the bear algorithm has made its money because they shorted up here. Okay, so we had that push down, boom, 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 boom. And you could see here, we actually completed a full measured move to one of my custom Fibonacci levels, the 0.169. And the reason I have that level is because that 0.169 is a level that I've used a lot in SPY. So this is specifically to SPY because this is the one that I trade every single day. Okay, so we completed. Okay, so we completed the move. So what happens when we complete the move? Well, when we complete the move, what happens is The bear algo over here is going to cover its profits, okay? And the new bull algo is going to want to come in because it's a buy the dip opportunity. So any institutions that are using Fibonacci based algorithms, they can have this area in their program as a dip buy, especially since the correction was how big was this correction? Let's see. It was about a 14.5% correction. So not only do you have Fibonacci's, but you also have general programs in the stock market, general algorithms that buy, under a 10% drop, under a 15% drop, etc., because they're always good risk to reward plays. Okay. And another thing I'm going to ask you guys is, look, let's say you're a large institution and you have hundreds of millions of dollars of investors' money. What are you going to do? Are you going to buy at the high, or are you going to wait for a 15% drop to buy? What would you do? Hit me with a 1 if you would wait for a 15% correction and then deploy the money, or would you buy at the all-time highs? Hit me with a 2. So I want to share with you some of that psychology of the bigger picture, the bigger players. You have to understand all of that, okay? And anytime there's blood on the streets, as we call it, there's going to be an institution that it's going to come and get the signals and take a good risk reward opportunity. It doesn't have to be right, but at least they're getting a good deal, right? It's like if you go to Five Below, you buy something from Five Below, you buy 3 items and 1 item is not as good as you thought and the other 2 are good, you're still happy. You see what I'm saying? But if you go now, let's say you go to a high-end store and you buy 3 items and that one doesn't work, then that's a problem. See what I mean? Okay, so that's how we got here. Question is, where are we going next? So if you guys have been following me, right, I mentioned these extensions and so this is going to go a little bit more into what I did. So what I did personally here was I bought a bunch of stocks. So I bought Microsoft. I also did Intel. So I did long-term in plays and day trading, long. Okay. So for example, here's my P&L from Friday on one of my accounts, my small account, Facebook, Microsoft, Intel, all longs that I sold into strength. But I also have longer term plays here, Microsoft, PayPal, different names, futures that I'm taking a shot with. And as you can see, we've already had a huge bounce. So what does that allow me to do now? Well, that allows me to put my stop loss to break even. So I'm in a risk-free trade. That's the way you have to trade. You have to come in when there's fear, when there's, you have to think like an institution. And then when you get that first pop up, you want to go ahead, lock in something and put your stop loss to break even where you can. And that's where we are today right now. Okay. So where are we going next? All right. So from an aggressive perspective, what we have here is a measured move completion, and we have a sequence leg now. So all of these concepts, guys, are from my Fibonacci book. All right. So if you like it, definitely check it out. Tradingwars.com. So now we have a sequence leg. So what is a sequence? Well, the sequence means that this now will become our anchor point. Okay. So this pivot up here will become our anchor. So we're going to go ahead here now and take it from this high down to this low. Okay. And I'm going to just push it out here so we can see it. And let me just make sure 458.12. Let's just update it and make sure it's perfect. 458.12, and the low is 410.64. So the question is the bear going to try again, or are they satisfied? So right now we're looking exactly for the same play. So right here on the 618 could even go back up to the 786. Anywhere in this area is another attempt for the bear algorithm to try to short. Okay. And this would be a good risk to reward trade. Why? Because they could take a short right here, put a stop loss at the last pivot. And if we come back down, start breaking into lows, we have a great risk to reward trade here. So that's what the bear is doing. So we're definitely not out of the water yet. So what are the levels we need to look at? Let's draw them. So we need to look at 434.38. Okay. We also need to look at 439.98. So let's just skip the 50 because this one already broke. So the 618 was like the last time we saw the algo work was at the 618. So this is what I'm really looking at. 439.98, and then let's go one more up, 447.96. So this is the area we are watching. And most likely we will have some trading opportunities within this range for nice scalps, for nice little day trades, for nice little, pushes up and down. It's going to be very volatile in this range. Okay. And the must hold level is this weekly low. 410.64 is a very important level because this is where the bulls, the algorithms, everything coincides. We're at previous support. And as long as this holds, this could definitely be the low of 2022, right? If this holds. So the line in the sand is right here. Okay. If we break this, we open up a lot more downside. We have a gap right here. Okay. That would probably fill pretty quickly around 400. Okay. And a lot of trapped inventory is here. So these are the three levels you got to watch. The weekly low, the 618, and the 786. All these three levels. So there's also a news factor. Okay. And this trading environment reminds me exactly of the trade war. Okay. Because it was exactly very similar with the volatility, with the gaps in the market. And obviously it's not the same magnitude, from a political issue, it's a lot more worse. But in terms of what we see on the volatility and the charts, we are getting a lot of gaps. We're getting a lot of volatility. And with that being said, oops, it's my brother calling me. I got to call him back after this, guys. But if we do have a gap, okay, so watch on Monday. If we have a gap, guys, so this is the daily chart. If we gap, and especially if we gap down, that will be very, very bearish because we've had 2 days of very heavy buying. So you watch the futures on Sunday when they open, watch the open on Monday. And if we gap down and we start testing this, there could be a devastating drop coming. And I remember this with COVID moves and all that. The way that volatility works is if there is a news factor in it, but all you can do is trade what's in front of you. And I'm going to show you examples this week. I'm going to show you examples this week of the trades that I took on SPY. Even though there was news, even though everybody was in fear, I'm going to show you what I did. Okay. So hit me with a 5 if you're interested in that. And I'm going to go day by day, and I'm going to show you what I did in SPY. And this goes into what you can do. So what you can do is you can day trade, you can remain agile, and you could be willing to take quick scalps every single day because the volatility is there. So as an example, what you would normally make on a swing trade that might take you a month, you could probably make that in a week because the volatility is there. So day trading, it's a great time, a very great time to day trade. And even with small size, you have great opportunities. So what we're going to do, we're going to go to Monday, and I'm going to walk you guys through everything. Okay, so we'll get rid of the line so it's clear for you guys. All right, so here we go, Monday. Okay, well, there is no Monday, right? We open on Tuesday, so short week. Okay, so what you want to do every single day is you want to have the previous day's low and the previous day's high drawn. Okay, we're going to hit the replay, and I'm going to go to my room, and I'm going to follow the live commentary with you, and we're going to talk about everything. So I want to show you how you can, as a day trader, you can come in here, you can capitalize on these movements, okay, with small risk, okay? All right. So you could see here on Tuesday, the first thing that we did was an opening range breakout, and I went short at 933, and then we got a good breakdown. And another thing that I want you to know is you need to be agile. What does that mean? You need to take profits. Okay. You can leave some runners on. You can. but you need to take profits because the market can turn on a dime. So if you're greedy, don't trade. But if you're willing to follow a plan, you can make good money. Okay. So here we go. So the first thing that I did, I was on the 3-minute chart. So the first candle comes in right here. So this candle to me, guys, is a very important candle. Why is that? Well, because look, this was Friday's low. So you have to imagine any bull that bought here is going to be in pain, right? Because they had all of these gains. We came back, we popped up a little bit. They were trying to hold through the long weekend. They were hoping we were going to get a nice gap up, but instead we gapped down and we're threatening their stop loss. So who do you think's in danger here? Hit me with a 1 if you think the bears are in danger. Hit me with a 2 if you think the bulls are in danger. Who's in trouble? Okay, who's in trouble here, guys? What do you think? So whenever we have a trap or any type of damage on the chart, I want to take an opening range breakout. Always. I'll always do that. And I always let my members know in the morning what's the game plan. So here we go. Opening range breakout comes in. So what you want to do with the opening range breakout is this. You put a line on the high. So let's just put this in a different color. So green. You put a line on the high. You put a line on the low. So there you go. Okay. So if it breaks the high, I want to go long, buy calls, buy shares, buy futures, whatever instrument you want to use. And if we break the low, then we want to go ahead and go short, buy puts, short futures, anything. Okay. You just want to short. So your tool, the tool you want to use depends on you personally, your account. Do you have margin or your cash account, etc. Okay. So here we go. Next candle comes in, boom. Okay. So that literally in 3 minutes, we hit our profit goal and target. So what I like to do here is when I'm trading this bar here, what I want to do is I want to make a good bar. So I want to risk a bar to make a good bar or at least half a bar. Okay. So we take this beautiful play here. And then you can see right here, guys, I'm saying cover, 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 leave a runner on only. Massive drop here, guys. Congrats. Very nice trade. So this was at 935. So, and then the last thing I said is I have a very small runner left on the play. We just crushed the best play on the day. I'm going to call it right here and protect our gains. So once I cover, so if I'm doing, let's say 5 contracts, 4 contracts will be gone right off the bat. Because at the beginning of the week, the most important thing is to get green. Start off green, have a cushion so you feel psychologically good. And also you're not going to feel like you need to revenge trade. And that's something that I've learned over the years. I want to get a little profit in. I want to feel good. Okay. So there we go. And then once we get that first drop, stop loss goes to break even. And you'll see from here, we had a huge reversal. Okay. So that's what I mean. You got to take profits. So that was my personal call out on Monday right here. Okay. So we had the breakdown, we pulled back, and then we rolled over even more. So technically you could have gotten back in on this gap fill. We had a lot of other setups, but I'm just going to go with the first play that I call in the room, the ones that I do live. There's 100 things on this chart that I could just go hindsight. I could say, yeah, well, you could do this and this and this and this. I'm just going to stick to what I actually called out and what I actually said to do. Okay, so hit me with a 1 if you like that. Okay, because I could look at this and be like, yeah, you could have done a V bottom, C bottom, E bottom, elemental P bottom. Okay, but that's not going to help anybody. What is going to help somebody is seeing what I say live. Okay, so hit me with a 1 if that sounds good to you. All right, so we're going to move on to the next day now. So the next day was Wednesday. Okay, so same thing. And make sure you guys have your pen and pad out because I'm actually teaching. I'm teaching different ways I trade, and you'll see like when we go into this day, it's a completely different strategy because it depends on where the open is. Okay, so let's move on. Next day. So what happens in my room, guys, is after I do my morning plays and I do my things, the bot calls out the rest of the plays. The bot always gives good trading war setup. So it gives 5-minute and 15-minute chart great setup. So what I prefer for my traders to do, and everybody in the room knows this, is stick to the trading war setups if you're going to trade later on in the day, because you don't want to do random things. You want to follow a system. And I know that these setups have decent win rates where you can make money. So here we go, Wednesday. So what I ended up doing today is I waited on Wednesday. I waited all the way until, I'll tell you the time here, short at 9:50. And then we made a huge amount of money on that day. I'm going to show you what we did now. Okay. So the first thing is, because we're opening, you see how the last time we opened on Tuesday, we were near the low, but this one is in the middle of the range. So here's the high and the low. We're in the middle. And because we're in the middle, I don't want to take an opening range breakout because I don't believe that there's going to be a very strong momentum at the open because nobody is really trapped. Like, there's no one that is in a position of extreme pain like there was on Tuesday. So what do I do instead is I wait for my fractal plays or my fibs. So in this case, you'll see what happened here, guys. We got an outside bar, and that's what caught my attention. Then it became a holy grail, and then it became a double. So we had an outside bar, became a holy, and then a double. So when I had this pattern, all this means is extreme consolidation, because we're just getting into a tighter and tighter and tighter range. So all I did here, guys, is I had my orders on both sides. If we broke the high, I wanted to go long. And if it broke the low, I wanted to go short. Very simple. Okay. So the next bar comes in, boom. So right there, guys, like I said, on that first bar, like when I get one bar, I want to at least, I want to take off a good chunk of my position, move the stop loss down. And then from there, check this out. Just beautiful. So that one runner paid me so much money because it was an insane drop. So we caught the high of the day on Wednesday. Okay. Let me just let it play out here. Hit me with a 4 if you're following me right now. Okay. So you'll see here. So outside, double inside bar, short. So, Roman, my brother from another mother, he's in here helping me as well. Targeting 431.82. Boom, baby, cover more, no greed. What an amazing team, guys. That's how we do it. Sniper precision, wait for plays, ignore all the noise, just have a run and left short. Who's banking with me? So we did really well that day. Okay. And now we're going to go to Thursday. So I'm going to ask you guys to help me here because I want to test you if you've been paying attention. So first question is, hit me with a 1 if you would take an opening range breakout on this play. Okay, so I need to go back to the 3-minute actually, because whenever we have a gap, I always start off with 3 minutes. So let me do that. So hit me with the first candle. Here you go. This is for you. What would you do? Hit me with a 1 if you would take an opening range breakout. Hit me with a 2 if you would do nothing. And tell me why if you can. You don't have to, but if you don't mind, tell me why. So this is my rules, right? This is my style. But again, we have a major gap down here. And I remember on this day, everyone and their grandmother was talking about the world's coming to an end, right? And I know a lot of people blew up their account on this day because people had messaged me and told me because they could not let go of their bias that the market is going to crash. Okay. They could not let it go because they're so into social media. They're so into all these gurus that they're not trading the chart. And the moment that you stop trading the chart is the moment you might as well take your money and go to the casino, because that's basically what you're doing. Okay. So here we go. We are here. We're gapping down. So let me go to my commentary and walk you guys through it. Good morning. This goes one of two ways today. On large gap downs, so this is on the 24th at 9:15. Institutions may step in at the open to buy the dip, or the rug gets pulled and we drop further. The worst case scenario for us is we chop, which is also a possibility. So the first thing that I said, because we had big volatility, make sure to size down today. The open volatility is going to cause the range of the candles to be large. Let's try the orb 3, 5, 15 minutes a day. Make sure to size down. So I went long at 9:33 on that first 3-minute bar. Okay, now check this out. Here we go. Here's your bar. Boom. Okay, you get filled. It looks a little bit scary, right? And then bam, 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 boom. Start pushing. And at the time, everybody's like, market's crashing, this and that, blah, blah, blah. But guys, we do the same thing. Like, we do the same thing, whether there's news or there's not news. You do the same thing. You do not care. The things that are out of your control, whether it's in the stock market or it's in life in general, you need to just ignore them. Okay. And eventually we just have that beautiful push. Where do we stop? Right. Where do we stop? Keep going. Go. I don't want to show you guys the 25th yet because we have to get there. 1551. Boom, boom, boom. There we go. So that's the next thing. Okay. So there we go, guys. Look at that. Beautiful opening range breakout, man. Like, that's pretty insane, right? And it's the same setup. Gap down, orb. If it doesn't work, you cut your loss on the first bar. But what is the upside potential here? How many bars do you make on this play? Okay, obviously you're going to scale out. But let's say on your runner, how many bars do you catch on that runner? Let's just say you held it to the end of the day. That's about 8 bars. So if you make 8 bars on a runner, guys, you're going to make money on the week, period. Period. So that's the power of scaling out. And I'm not going to go into all the details, but we had a lot of other plays on this day. We had Fibonacci's and all that. We had a lot of plays. You'll see here. Let me find. So we did some fib plays that made some extra money, but that's a topic for a different video. And then here we go. Let's go into the yesterday, which was Friday. So hit me with the 7 if you're following me so far. Is this too much for you guys? Does this help? Hit me with a 7 if you're following me. Sometimes I see the viewer count drop, so I wonder if I'm going too technical. Maybe I should just take a Lamborghini and post it somewhere. So what do you, is that good? You guys good? Clear so far? Okay, good. All right. So let's go ahead now and let's do Friday. And surprise, guess what? It's going to be the same setups. So here we go. So let me read it to you. Small gap up today. Let's try the orb. So it was all orbs this week. And we had one day, which was a fractal. Okay. But we had orbs for pretty much the whole week. 4 days out of the week. 3 out of the 4 days out of the week. So small gap up today. Let's do the orb. 1 minute to 3 minute orb. Long, partial targets trim, scale out more. Boom. So here we go. First 3 minute bar. We're opening above. You see this? We're opening above the previous day's high. So we're going to give that one a shot. Boom. Breaks up. There you go. That's it. That's pretty much it. Right there. That's more than a bar. You've made your money. Okay. And then from there, guys, we have a little bit of a dip, retrace, and then eventually it starts to run. So unfortunately, on the runner that I had, I was not able to fully get the whole move, but you know, that's a part of the game. But what I was fully able to get was Intel. So I'm just going to bring that up. I just want to show you sometimes the orbs, sometimes orbs on different charts are going to look differently, right? And for me, I didn't take an orb on Intel, but I took this price here at 46.50 and I was able to take the whole move. So I wasn't able to get it on SPY, but hey, I got it on Intel. So all good. Okay. So there we go. That was it. I mean, all of my call outs this week were spot on. We had 100% success and it was really good. I'm really, really happy. The last 2 weeks have been good. But the point of this was just to show you that you need to trade what's in front of you. You can't control the news. You have to take setups that have good risk to reward. And what the news allows, what these other things allow is for increased volatility. And that's what you should be looking for. Increased volatility to help you take your trades. That's pretty much it. Okay. All right. So there we go, guys. So we went through everything on SPY. We talked about what the bigger picture looks like. We did some day trading teaching so that you can have some tools in order to get in there and day trade with little risk, right? Because when you day trade, you don't have to hold anything overnight. So you avoid that whole risk there. And hey guys, look, if you enjoyed this session and you had a good time, check me out at tradingwars.com. If you get any one of my 3 books, you get 1 month for free in the room. You could trade live with me on Monday. And it's a good value, 99.99. It's 70 pages, a lot of charts for you to learn. The orb is something I talk about there in great detail, which is a good strategy for new traders. And otherwise, you could just sign up directly here if you're interested. Okay, so there we go. I hope you learned something from that. I'll be back again tomorrow. Just as a quick, just to gauge some interest for tomorrow, would you guys like to review SPY again, like these day trades, but look at some more trading opportunities like Fibonacci's and some more fractals, maybe the 15-minute chart and the hourly? Hit me with a 1 if that would interest you, and then we could do that tomorrow. Hit me with a 1 if that makes sense for you. Okay. Okay, yeah. So we could do like a kind of bigger look and do some more training tomorrow. But this is what you got to do for me. Go ahead and please comment, like, subscribe. You guys know what it is. Tomorrow I'm doing a giveaway, a few giveaways. I'm going to do one specifically for my Trading Wars Army members. So anybody with a green in their name, like Bad Indie right here, D with the psychology, I'll talk about that. Anyone with a green in their name will have their own special giveaway. So you still have time tomorrow. It's $4.99 a month. Join the Trading Wars Army. Help a brother out that's teaching you guys stuff, that's not charging you $5,000 like your favorite person on Twitter. Okay? Thank you very much. So I'm going to end the broadcast here and just leave a comment for me tomorrow of like kind of what you want to see in SPY. I'm kind of running out of ideas on what to talk about. So let me know what's really on your mind. So I'm going to end the broadcast now. Let me know what's on your mind. What do you want to talk about tomorrow? All right. Take care. See you tomorrow.